Good afternoon, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago talking metals. Let's talk about copper, which was slightly higher. Normally I would call this unchanged, but we did back off from a 5-month high. It was almost a 4.5-year high that we backed off from. We missed that by a few cents, getting to about 326 by the close, backing off of that 5-month high. Again, we fell just a couple of pennies short of that 4-year high. We've now got 5 of 6 sessions higher. Again, if I'm technically calling today higher, which it was, although it was super slim. And we've had 3 consecutive weeks of higher copper prices, most of it based off of economic strength globally, but some of it based off of a couple of other things. Number one being the dollar backing off a little bit. The dollar was a little weaker today, not necessarily on dollar weakness, strange as that sounds, but more on continued euro strength. German factory orders missed a little bit, but the focus still seemed to be on the hawkish comments by several ECB board members, including Krauss, Pratt, and Weidman, all very influential board members talking hawkishly about the euro, which weakened the dollar ever so slightly, and weaker dollars helped all the commodities, especially the base metals, and as you'll hear later, the crude oil patch as well. That weaker dollar's inverse relationship to commodities always tends to take hold when all else is equal, but in the case of crude oil, all else is not equal, although this particular factor plays to the bullish side as well. There are some supply concerns with copper. Now, this time of year, you get these concerns, you get these disruptions, because it's kind of what they call the labor season in the copper mining industry. And the labor talks in Chile, specifically at the Escondida mine, which is the largest in Chile, and Chile is the largest copper miner in the world. The talks are not going well. They've not gotten any further in their labor negotiations. There is not a strike imminent, but we did experience this a couple of summers back where we did have a major strike there, and it triggered domino effects of other strikes. Now, copper is a market that experiences supply disruptions. Usually, it's a typical thing in copper markets, but it wasn't priced in this time as some of the other factors had taken hold. Now they're starting to price that in, which again is why we just missed a 4-year high and reached a 5-month high and sold off from there in copper today. This is Bob Iaccino talking copper futures from the CME Group trading floor in Chicago.